There's a difference between a profitable trader and a trader who knows how to trade. A trader who knows how to trade has all the forest knowledge in the world,
but still yet unable to refine it into making us money.
Traders like this most times are just traders like you who learn off YouTube, who use our natural ability to learn things fast and learn forex on YouTube.
A profitable trader is a trader who has already discovered it all out, have been able to refine their knowledge into making them real cash. Their win is more consistent than their loss. Now, I will tell you that I'm a profitable trader because over time my results have proven that. And if there's anything that made me profitable today, it is simply understanding market structure, how the market moves, not just strategy, but understanding the mentality behind forex, which I will do my best to share with you guys here.
What I understand that most people fail to understand most times is market structure, and I'm just going to show you with this trade I took on USD CHF. Let me show you guys something.
I got this trade on USD CHF today, Monday. The trade just activated. Now let me explain to you how I came to this conclusion and why I opened the trade. Starting from a top-down analysis on the weekly time frame. On the weekly time frame, what I basically do on the weekly time frame is to read previous week candle, mark out the highs and low of previous week. Now, for example, as you can see, the previous week before this week candle has some rejection candle above here, this long rejection candle here, and a little rejection below, telling us that buyers came into this market, pushed this market up, but later along this line, sellers came in and pushed it down, telling us one thing, that buyers and sellers are interested in this market. So what I do is I mark out high of previous week and mark out the low of previous week. I also mark out the low of week before the previous week. The logic is simple. If buyers are going to take over this market, then we should see markets that print higher highs, that continuously prints higher highs and higher lows. So therefore, if this market must be long, then it has to break this high. Same thing goes to the low. As you can see here, I marked the previous week low and the week before the previous week low, and the logic is the same thing. If market is able to clear this previous week low, then we'll start looking for a sell down to the previous week, because yes, if this market is going to be bearish, then it has to keep printing lower lows and lower highs and also break the previous week low.
And when market takes out this low, then the next low, which is the previous week low, will be the next target. We can get some nice opportunities to trade this market down from that low.
So that's the reason why I come on the weekly time frame and mark out the previous week highs and lows. Going on to the daily time frame. Daily time frame is basically where I look at market structure and trend, where what the market is trending, because I use daily time frame to know the trend of the market. So on this daily time frame, as you can see, this market is clearly on a downtrend. Let's read this market structure. As you can see here, we had a low here, we came here, formed a high, we came here, formed a low, we came here, we formed a new high, and then we formed a low that took out this previous low. So now that I know this market is on a downtrend, the only thing that I should be looking for on a long run is to sell from supply zone. I marked out supply zone, totally ignoring any form of demand zone. As you can see, I marked out the supply zone as it is the only unmitigated supply zone. If you look at the left, there's no other supply zone from the daily time frame here. This is the only supply zone, the only unmitigated supply zone right here. Now on this supply zone, as you can see clearly, market has tapped on this supply zone here. A market has tapped on this supply zone, and the next thing we are expecting and anticipating this market to do is it's continue trending low and break the previous week low to continue its downtrend, or to disrespect the daily supply zone by breaking this low, and by doing this we start looking for our buy. For the current time, now that market has met with this daily supply zone, I won't rush to immediately start reacting and start selling. What I will wait for, and what I waited for the whole of last week, was to see a market that shifts structure in the lower time frame, telling us that yes, this market is ready to go bearish. Now what I mean by structure is, if market shifts from making high highs like this on the lower time frame trend, high highs like this, and shift into making lower lows, break structure to the downside and start printing lower lows. Now let's go down to the 4-hour time frame and see if we had that on the 4-hour time frame. Now on the 4-hour time frame, what we're looking for is a market that shifts from bullish to bearish trend, because of course we know that market is currently on a daily supply zone.
So we are anticipating a sell and buy sellers to take control.
The way that sellers will tell us that they are in the market is by flipping the structure from bullish to bearish. And as you can see, we already done that here. Now let me explain the structure right here. As you can see here, market came here, had a low, came here from the high, came here, formed a low, came here, formed another high, came here, formed the low, and we formed another high here that broke the structure. We formed a low and then a new high. Now after this high was created,
we saw sellers pushing down the market and breaking structure to the downside, and this is exactly what we came here to look for.
We came here to look for market that shifts from printing higher highs, higher low, higher high, higher low, to shifting into printing lower low, lower low, and lower highs. Now after market shifted the structure right here, let me delete this. After we had this break that shifted structure from bullish to bearish, market left us with this unmitigated supply zone with nice fair value gap, as you can see right here. And that's where I place my limit order with my SL above the swing high of previous week. Now this is quite simple. If market is going to be bearish, then yeah, it should start declining from here. But if market doesn't react from the supply zone but breaks, then I'll stop looking for a sell and start looking for opportunities to buy this market, because yeah, it has cleared the previous week high, and I will start looking for my short-term opportunity to sell, to buy this market and join the trend. So let's just see how this market goes.
This trade is currently running a 1:2 plus right now. So let's wait and see if it hits take profits. This trade currently is running a 1:3 plus. It's currently running a 1:3 plus. Why this trade is running, I caught another trade on USD JPY, which has already activated and running very, very well. Let me zoom it in. So this trade also is a 1:3. I was actually aiming a 1:4 plus here, but I want to reduce it to 1:3. And these two trades are running very, very well, very good way. With these two trades, he just hit take profits. I will be done for the whole week. I'm no longer trading any other thing that Forex has to do. I will just have to recheck it. Let's quick one, yeah. Let me give you a breakdown on how I got this trade. Yeah, it's already 9 p.m. going to 10 p.m. I might just close this trade now because night spread, because sometimes the spread are so wide that God. But that's by the way. Let me explain the trade. JPY started from the weekly time frame where I do my top down analysis. I read the previous week candle. Now as you can see, the previous week candle ended in strong bullish candle. Now let me explain something. In the previous week, we saw buying pressure came into this market, pushed this market all the way to $153, but sellers were able to come in at some point in the market and push this market down. I'm telling us one thing, that buyers and sellers are interested in this market. I marked out the low of previous week, and also I would have marked out the high of previous week, but I didn't. I'm going down on the daily time frame. Let's see the structure. Now we know that buyers are in this market, sellers are also in this market. Now which side should we be on for the meantime? Now this daily time frame, as you can see, this market is clearly on an uptrend. You understand? This market is clearly on an uptrend. But I want you guys to notice something. Notice how after market took out the structure right here, and also this internal structure, it's left us with this big gap here, this unmitigated gap. If you don't know the logics of gaps like this, logic have it that markets always come back in future to fill these gaps. You understand? Telling us one thing, that if buyers are going to step into this market, then the point of interest where I see this happening is if this gap is being filled. We might be seeing new buying pressures in this market when these gaps are being filled, because this gap always inflates fear in buyers' mind, because as long as this gap is here, trying to buy this market from anywhere here is just kind of risky. You understand? Now that is it for the gap. Now we know that this gap is here. This gap will be acting as a magnet for price to pull back in future and fail. Now we have a magnet and a reason to believe that this market is going to pull back to $148 at some point this week or next week. Now we have that reason, we might start looking for trading opportunity to set the market down, at least make a little profit before this gap are being filled. Now, in a clear uptrend like this, the only way we can look for a counter trade like this is to look at market structure and look out for shifts in structure from bullish to bearish. Now, I want to go down at the 4-hour time frame so you do see everything clearly. Now, before I go down to the 4-hour time frame, I want you to notice something. I want you to notice how this last daily candle right here was engulfed by this red candle, totally clearing the lows here. Now, if you go down the 4-hour time frame, you will see a clear break of structure. Now, without wasting much of your time, let's go to the 4-hour time frame. Remember, I told you if we are to set this market, then we'll be looking for a shift in structure from bullish to bearish. Then we know that sellers are already in this market. I want you to read this structure for me with me. Now, market came here from the low. We came here. we came here, formed a high. We came here, formed a low, a new low, and then we came here, formed a new high. This high actually cleared this other high, making this a valid swing low, a lower high. After market got to this highest point, we saw a sharp drop to the downside. This sharp drop broke this low here, making this a valid shift from bullish to bearish structure. And when this happened, we start looking for our short-term sell. Already we know that there is a magnet and a reason, at least a logical reason, we can call a backup reason to sell this market. Now, after market took out this low here, it pulled back to supply zone, and after it pulled back to supply zone, we saw another new break to the downside. They know that this market is ready to make the move that we're anticipating, which is a temporary sell down to that, to fill that gap. Now, going down on the 1-hour time frame. Now, on this 1-hour time frame, I want you to notice something. Notice how we have a mitigated supply zone here, another one here that I marked out, and another one here that I marked out also, but I traded from here. Now, I'm going to tell you the reason why I chose this one instead of this one that is far. I know a lot of your YouTube mentors tell you to buy from the extreme demand zone, but I'm going to give you a structure master class that you can start implying today and increase your profit, especially when you see things like this. Now, the reason why I chose the second supply zone as my entry is quite simple. Read this structure with me. It came here, had its last high here, came here, it formed its last low here, its last high here, and market broke this structure. And after market broke this structure, it's put back to supply zone. Now, I want you to notice something. As you can see, this supply zone got some, after this supply zone was tapped on, selling pressure came into this market, but got interrupted somewhere along the line, this particular place. The market consolidated a little while, telling us one thing about the supply zone. Though it might look like the best to trade from, but it's not actually the best to trade from, because it didn't push us into a new low and to continue this structure. I was only interested in the particular supply zone that took us into creating a new lower low and continue the down trend. You understand? That's the reason why I chose the supply zone. Now, there's something I want to also teach you about this extreme supply zone. I want you to understand something. In every market trend, there is always a swing trend, which is the higher time frame trend, and substructure trend, which is the lower time frame trend. Listen to what I'm trying to say now. After market broke this low here, telling us one thing, that this market has shifted its structure from bullish to bearish. But after this low was broken, we saw that markets had a substructure bullish move to the upper side on its journey to the supply zone, the 4-hour supply zone here. You understand? Now, after markets made the supply zone, we saw a sharp decline to the downside. That is, market made this sharp move again to the downside, leaving us with this supply zone. This supply zone would have been a good supply zone to sell from, because it is the supply zone that flipped the substructure bullish trend to bearish. You understand? In a case where this kind of thing happened and market didn't came back to tap on it like this and just did the same thing it did here, got interrupted somewhere along the line, consolidated before breaking into a new low, then the supply zone that broke that low is the first valid supply zone to trade from. I hope you understand. So I'm waiting for this trade to see if this trade gets to hit take profit. And let's keep watching.
So it's 6 a.m. and I just woke up this morning to take profits. This USD stage he take profit and made us $92, and USD JPY also he take profit already. It's already hit take profit, but this one, honestly, I'm going to be honest with you guys. I closed this one yesterday night. I was supposed to make $62 here, which is 1:2, which is 1:3, because I reached $20, 0.4% of my account in every trade. But I closed at $50 because after recording a video, I came back to see that the spread was so wide that it could have taken me out. So I just closed it. That's by the way. I guess I'm done for the week. So yeah, have a nice day. I hope you learned something from this video. If you did, hit the like, hit the subscribe button, and it's your boy Ismex. See you next time.